Hey everyone, and welcome back to Am I Catching a Falling Knife? I'm your host, Dave, and today we're diving headfirst into a stock that's seen a pretty dramatic tumble recently. We're talking about Eastman Chemical, ticker EMN, which has dropped a significant 24.41% in just the past 10 days. So, the big question on everyone's mind is this a sharp fall from grace, or is it an opportunity? Let's find out. Now, the market narrative swirling around EMN is pretty clear, a significant miss on their Q2 earnings expectations, and they've also lowered their earnings forecast for the rest of the year. Add to that concerns about weak demand, the murky waters of U.S. trade policy, and the company's own plan to trim down inventory, and you've got a recipe for investor jitteration. So, who is Eastman Chemical? They're a global specialty materials company founded way back in 1920, headquartered in Kingsport, Tennessee. They produce a huge range of advanced materials, chemicals, and fibers for everyday products. Their business is split into four main segments: advanced materials, which makes up about 32.5% of their revenue, additives and functional products at around 26.7%, chemical intermediates, another 26.2%, and fibers, accounting for about 14.6%. Geographically, the U.S. is their biggest market, representing over 40% of their revenue. Now, let's unpack the impact of this narrative. The market's consensus is that the Q2 miss and lowered forecast are hitting profitability hard. And why? Well, weak demand is a big one, but so is that uncertain U.S. trade policy, especially for their chemical intermediate segment, which is about 26.2% of their revenue, and usually sensitive to these kinds of economic cycles. The advanced materials and additives and functional products segments, together making up nearly 60% of revenue, are also feeling the sting from weak demand. Even the fiber segment, less exposed to trade policy, is likely impacted by reduced consumer spending. What really adds a layer of concern is their financial health. They've got $5.13 billion in total debt and, more worryingly, negative free cash flow of $0.231 billion trailing 12 months. This means that with lower earnings, their ability to service that debt could become a real issue. To quantify this impact, we estimated that a 10% drop in revenue, considering their 22.1% gross margin, would directly cut gross profit by about 2.21%. However, the significant miss and lowered forecast suggest something more is going on, likely cost pressures or operational hiccups. Factoring in all these negatives, we've landed on an estimated earnings impact of negative 15%. Now, we're not 100% sure on the exact number, hence our confidence interval of negative 12% to 18% due to the qualitative nature of the narrative and the interplay of these many factors. So, how does this translate to value? I've looked at this using two methods, pulling data from finviz.com. First, a discounted cash flow model. We used assumptions like a 4% growth rate and a 9.5% discount rate. This gave us a base case DCF value of about $113. But when we factor in the negative narrative, that value drops to around $99.50. The second method, a simpler PEG-based valuation, which looks at the price-to-earnings ratio relative to earnings growth, suggests a fair value of about $47. This implies that even with the negative narrative, the stock might still be trading below its potential fair value based on historical valuation multiples. Considering all this and looking at potential entry points, I've jotted down a few levels. If things get really hairy, $45 could be a level to watch, followed by $35, and then a more aggressive $25 if the situation deteriorates significantly. These are just my thoughts, of course. So, that wraps things up with Eastman. Remember, folks, this is not financial advice. I'm just a guy with a mic sharing my thoughts. You absolutely need to do your own homework and consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in to Am I Catching a Falling Knife? I'll catch you next time.